Welcome to the Brave New Wealth podcast. I'm your host, Julienna. Bienvenue à tout le monde. Bienvenido a todo. Willkommen alle. I've welcomed you in 4 languages. I hope everybody feels welcome here. Now, in this podcast, we will discuss reinventing wealth mentally, physically, socially, and financially. This podcast is sponsored by Engineer Tax Services, where I am a director. Engineer Tax Services is a subsidiary of Engineer Tax Advisory. And our goal is to empower business owners, CPAs, advisors with proven expertise, education, and innovative strategies to help your clients, yourself, reduce your tax burden. And most of all, take advantage of all the tax incentives that are available, but not always obvious. So we're here to help. Please reach out if you fall into those categories and see what we can do for you, especially with the tax season approaching now. Now is the time to act. Now, in each episode, I will have experts in their field coming on, sharing their insights. And the hope is really that you get inspired, you learn something new that will help you move yourself forward in your personal life, in your business, so you can reach your goal a little bit faster. So even if a topic is familiar, sometimes it just takes a new perspective, a new voice for the coin to fall and for us to take action. So I'm really excited about the guests that will come on to learn about their lives, to learn about how they overcame their challenges and they grew from it. Also to talk about the successes they've had and how they've achieved them. So follow us each episode to learn something new. Please leave some comments and let us know what you've learned, because that's always great to read if you've learned something new. And I am sure that you will get a lot of value from these discussions, that you will be able to take some things for you and for yourself and for your life, your company. I am hoping that you will have a lot of those aha moments when you listen. So get comfortable, grab your favorite drink, and allons-y. Let's go. Thank you so much for coming to the Brave New Wealth podcast today. I'm excited that you are my first guest.
I'm so excited to be here, Juliana.
Thank you. Thank you. And so just so that, the listeners know a little bit who I'm talking to, I'll give a brief introduction, and then, of course, we'll dig more into it as we go along. So Heidi Henderson is one of the partners at Engineer Tax Services, a tax mitigation firm supporting CPAs, their clients, as well as business owners and real estate investors take advantage of tax incentives so they don't pay 1 penny more than what they are required. At Engineer Tax Services, Heidi oversees the marketing and advertising efforts along with business development for ETS. Her career has been spent in private accounting within the commercial real estate development and construction industries. This background allowed her to quickly adapt to the services offered by ETS as they relate to CPAs, business owners, and property investors nationally. And she enjoys traveling, loves the outdoors, biking, skiing, boating, and horseback riding. So, Heidi, welcome.
Thank you.
Yes, I am excited that you are here today. And I'm excited, even though we work together, there's a lot of things I want to learn more about. Now, in the Brave New Wealth podcast, we look at wealth from multiple different aspects. So we look at mental, physical, social, financial. Of course, there is other definition of wealth, but these are the things that we focus on here. So to start off, before we go into career and everything else, I would like to ask you, what is something you have done recently that is a bit outside of your comfort zone that has contributed to growing? And you can pick, you don't have to do all the categories. You can pick if it's something mentally that you've done, or something, with physical health, or, in your social life or even financially, like a step, something that you would not have normally done, but you're like, what, I'm going to just do this because I need to grow and I'm going to take the jump.
Absolutely. I mean, that's such a great question because I think I'm a huge believer that when we stretch ourselves out of our comfort zone and we take a leap of faith, that's oftentimes when we receive the greatest reward. It's really by working through the fear. A friend once told me about a book called Feel the Fear and Do It Anyway. And there's something to be said in that. I am naturally, from a personality perspective, probably more on the introverted side than extroverted. And I also tend to be, because I'm very analytical, I have a master's in tax and accounting. I love the numbers. I love the analytical side of things. But what happens is you can become frozen by overanalyzing things. And when you do that, it's like analysis paralysis. Mm-hmm. So I have all of this information, I have all of this data that I've learned and I've accumulated throughout my career. I love to read. I love to learn. I'm constantly stretching myself personally, spiritually, intellectually, physically. I'm always pushing myself through showing and training my horses, through pushing myself physically. I was an athlete in college, through high school and college. So I love that the personal challenge for me on the financial side, because of that very, again, analytical aspect of myself, sometimes it's a little scary to take that leap of faith into alternative investments and doing something outside what I think many people consider to be the norm, which would be, I'm going to work a job and that's my career. I'm going to grow. I'm going to save. I'll put that into my 401k. I'll have someone manage that in a diversified fund through stocks and bonds. And at the end of my career, I can retire and have this plan. That's kind of that's the thing that we grow up, I think, learning and being taught to do. Mm-hmm. And certainly I've always had that mentality. But being in the space that I'm in, I consult with people on how to be more strategic and how to think outside the box.
Yeah.
So I have to balance that side of myself that almost knows too much, because I'm so in the weeds with the tax implications, tax benefits, also risks, how the IRS views things, and many investments as it relates to alternative investments through real estate and a number of factors. So that's long-winded lead up to answering your question, that what have I done outside of my comfort zone? Really, it's stepping more into those alternative investments and trusting the knowledge that I've gained and I've learned over the years by investing with many of our clients in syndicated real estate funds, actually a lot of oil and gas investments, a number of different things that I know personally about the tax benefits that are associated with those. Mm-hmm. Real estate is one of the biggest ones, where it gives us an opportunity to create, it's this mentality that we hear about when people start to look at building their own generational wealth. It's, what can I do to really become financially independent and to create passive income? And so that is probably the biggest. I know it, but actually taking the step and doing it is a whole nother thing. So that's where I'm always stretching myself, is forcing myself to get off of the comfort train and say, no, we need to jump out and actually do something outside the box and make smarter financial decisions.
Wonderful. Well, thank you for sharing. And I can feel that, as you say, I think I'm a little bit like you, where I may have a tendency to kind of go with, when it comes to finance, stay a little bit more conservative. But there, in the past 3 years being in the specialty tech services, I've learned so much about all the opportunities that are available to anyone who's going to dare a little bit.
Yeah, all right, exactly.
We'll dig a little more into this when, we talk about your role and everything else. But just on a personal side, so I'll tell you, we work together, but of course, we're in the weeds and, doing our day-to-day things. So I looked you up a little bit, and I actually found out you had your own podcast.
Yes, I do.
Healthy, Wealthy, and Wise. Mm-hmm. And I listened to the episode with Kim. And
Oh,
that,
amazing.
yes, a beautiful thing, which I'm gonna plug it in in the notes for people to go and check it out. So I was amazed because so Kim is also a partner at ETS and she is Heidi's oldest sister and they're
Yep.
both amazing. Amazing stories. I'm not gonna tell you about Kim's story because, that's that podcast and I'm also gonna invite her to come on. But something I was excited about is, first of all, to find out that you're like 18 months apart, just like me and my sister.
Hmm.
And you have like that twin thing going a lot of times, which I can totally relate to because you're talking about having, how do you call it? Almost like you can read each other's mind
Like
sometimes.
telepathy. You
Yes.
totally do. You you
Yeah.
absolutely. I mean, growing up so close in age, I think you absolutely develop a unique ability to see and feel each other's emotions,
Yes.
to know what they're thinking, know what they're going to say.
Yes.
And Kim and I have worked together for a long time now, in addition to just living life together. So it's been
Yes.
interesting.
Yes, I was excited to hear that because my sister is now, it's Christmas time. We're recording in between Christmas and New Year's, you guys. So my sister flew from Dubai and she's 18 months apart and we always laugh because we're like pop in the same sentence at the same time. We do the same quirky weird things at the same time and then we just laugh at each other and sometimes I'm like, we're not twins. Like I wonder why we are so in sync like that. But, it was fun to see that it was the same for you. But a question I had for you, I explained a little bit, you like the outdoors. Where does that come from? Just being, an outdoorsy person. It seems like that's part of who you are and your MO. And then we'll talk a little bit about your love for horses too.
Absolutely. I mean, that's opening a whole can of worms. So I don't know if you really want me to go there. I might not stop.
Yes. Tell us
But
about your favorite things. Okay, just to have a little bit of, tell us about your favorite, where does your love for outdoors comes from, and then what
yeah,
led you into just this passion for horses? I think that would be interesting to know.
yeah, absolutely. I think when we look at ourselves and we really look inside to really better understand who we are. And as I had said earlier, we're oftentimes challenging ourselves to improve and to be better and to be stronger, understand why do I do what I do. I've been that way much of my life because I am a processor. I'm introverted and very analytical. So information comes in through relationships or through, let's call it in the day to day world, networking events. Let's call it a networking event.
Hmm.
I'm not one of those people that thrives in that environment. That environment takes a lot from me.
Hmm.
And as much as I love connecting with people on a really deep human level, a very personal level, more on one-on-one. So those big social environments, they draw the energy from me. And what I found is, in my family growing up, we really weren't a big, outdoorsy, animal focused family. I'm this one that sort of came out of nowhere and just wanted to only ever be outside and just had a love for animals when I was very young and was constantly trying to bring more. My parents were like, no.
We're not going to
Um,
adopt the whole
yeah, yeah,
all the strays out there.
yep, yeah. But for me, the outdoors in any form or fashion, because I pretty much like to do anything if I can be outside, I think it's because it's the emotional release. And I found that with horses as well. People who look up, the equine therapies where they're working with people with disabilities or
Yeah.
children with handicaps, it's because there's this really bizarre connection between the human psyche and the equine world. It has something to do with heart connection, which we can get really woo woo there. But
Oh, yes.
it really, as science begins and continues to expound and understand those connections, I've realized in my life that that's been a huge source of what I say feeding my soul.
Mm.
So those environments allow me to process, they allow me to release much of sort of the stress and the drain that I feel being in highly social environments with
Yes.
much of what I do. And so that's where I find that release. So that's why whenever I have a free moment, I really strive to balance that. And coming back full circle to your, Brave New Wealth, and also my podcast as well, is really, it's that we can achieve balance, and truly being, if we want to call it wealthy, is about finding balance to where we can strive in our careers, we can be financially successful, but if we're not taking care of ourselves emotionally and mentally and physically and spiritually, then what does it all matter? If you have all the money in the world and you're miserable and stressed out, what does it matter? And so that's one thing I work very hard to do in my life is I love what I do. I love my work, but really making sure that I take time for the balance and allow myself that time, because I find in those moments as well, through meditation or through outdoors or hiking or whatever it may be, that's where we actually allow ourselves the freedom of thought and those moments to actually be creative. And I think that's where a lot of success comes from.
Yes. No, that's beautiful. That's beautiful. And absolutely, that's the reason why I wanted to, start this podcast. And I honestly didn't know you had one because it's like we're like think alike. And but the more the better, the merrier, right? No, this is beautiful. So when did you first encounter the horse? Because you said your family wasn't really into, animals and whatnot. Is really something that's innate from you. So when was your first encounter? And you were like, this is, I love them, because there's plenty of different animals to pick from.
Yeah.
And when did it become your thing?
Yeah. When we moved, I grew up in Northern California outside of San Francisco, and we moved up outside of Portland, Oregon when I was about 10. And my aunt had horses, and I had a couple of cousins. So when we moved up there, we started to spend a little bit more time with them, and it gave me an opportunity to be around horses a little bit. It was really my first experience. And I just was hooked. I was just completely enthralled. I always tell people, they're like, oh, my daughter's starting to ride, or, my son wants to take lessons. And I said, here's when you let them have their experience. You wait until they get bucked off, especially if they get hurt. This sounds horrible. Wait until they get bucked off and they get hurt. And if they still want to ride after that, it's in them.
Okay.
They're ruined.
Okay. Yes. Yes. See, I've been horseback riding and all of the things, but I still have that little bit of fear. And luckily, I've never fallen off a horse, but it's always like in the back of my head, like, I don't know that I would be able to go back. Different with ski. I've hurt myself pretty badly. And then because I always hear that thing, like, if you fall off a horse, you just got to get back on as quickly as possible. Or, I'm like, well, how about you just don't fall?
Yep.
But if you
exactly.
do it long enough, it's kind of doomed to happen. Well, thank you very much for sharing that. So we're going to switch gear a little bit. So Heidi and I met at the beginning of 2024. I saw Heidi present here in Dallas at Hex Financial, and it's a financial services firm helping business owners. And you were talking about specialty tax services, sophisticated tax strategies. And I had been in that world with, B10 Capital for a couple of years. And I was so impressed when I heard you speak about it. Because as you know, a lot of people don't really know if it's not your specialty, it goes over a lot of people's head. And I'm like, she speaks our language. And you did such a beautiful job, so much so that day, you had a big long line after your presentation where people came to you, wanted, to learn more and talk to you. And I didn't talk to you right then. I had your information because you're always so good about giving the whole world your phone number. I'm like, she's really like trusting and, and so I texted you and you were so kind and cordial and answered me back like very quickly. And, we connected that way. Come to find out, our companies were a little bit already connected, but because we all have our own tentacles, I didn't know. After that, the Habu conference came. So that was Engineer Tax Services, presenting, bringing the CPAs together as an advisors with all of the beautiful things, you have to offer. And at that point, I'm still at, Beaton Capital. So I was really impressed with just the knowledge that you have and the passion that you have for what you do. So tell our, listeners, how did you end up at Engineering Tax Services and in the tax world in general? Because I know it wasn't originally your background, but you kind of get, like I think a lot of people, you kind of fall into it and then it's like, oh my gosh, there's so much in here that I
Yeah,
had no idea about.
for
And it's
sure.
amazing.
Yeah. Yeah. I mean, when I was in college, I took a temp job at a real estate brokerage in Oregon. And the gal who owned that brokerage firm was a very successful woman. And I was not raised in that type of a home. My mom was kind of more traditional. My parents lived a more traditional lifestyle. And so it was really interesting to be exposed to a woman who was really strong, really powerful, really successful. And I loved working with her. And that's where I think I started to get the flavor for real estate and the benefits and really seeing success come through that sector. So long story short, I ended up kind of doing multiple things. I think when we're in our 20s, we're always exploring and trying different professions and different opportunities. My husband at the time actually was in construction and had started a custom home building company. And so I had quite a bit of familiarity for years with real estate, with commercial developments, with residential developments and building and blueprints and all of this stuff. Mm-hmm. And through that, managing the accounting there, and then eventually moving on to become the controller of a resort in Utah, I really loved, again, I love the challenge. I love the challenge in my career. I love challenging myself personally. And that was a wonderful job. But once we finished developing out the resort, it became very mundane. It became very much just, monthly financial statements. And I started to realize, I want something a bit more challenging, a little more dynamic, and something that might get me in front of people a bit more.
Yeah.
And again, much of that was in real estate. And again, I was still surrounded with a lot of people in the real estate development space who had become very successful in their lives and their careers. And so that was very intriguing to me, as opposed to just working as an accountant in more of a standard, job role. Mm-hmm. So Kim, actually, my sister, whom we were just talking about, had started to work with Julio, our founder, at Engineered Tax Services. And she came to me and said, you really should come work with us. Everything we're doing is relating to what your whole career has been. It's real estate, it's taxes, it's accounting. And I said, I don't even know what you're doing.
That's funny. How long had she been there when she ended
she'd only been about a year and a half. Okay. Maybe a year when she really started to say, hey, I think you should come work with us. Okay. And it probably took me another year. Here's the conservative side of me saying, yeah, maybe not. Uh-huh. But here I am almost 14 years later working with ETS. And it does very much fall in line with my understanding and knowledge of my career of real estate developments, construction, blueprints, costing, all of these things that roll into accounting methodologies and taxes, and how we really look at investments to optimize the tax benefits, mm-hmm. many of the credits, the deductions, the write-offs, the associated incentives ultimately that the IRS provides for investors, because there's risk in that. And what incentives are made to do is to coax investors to do or perform certain activities that are going to be best for the social good, right? Or for our communities. And so really the incentives that roll into that as they relate to real estate are pretty dramatic. I mean, I really don't think there's anything else that comes close to the benefits that from a tax standpoint correlate to the real estate environment or investing sector. So that's kind of how I ended up from one into the consulting side.
Thank you. Thank you. So for people who are not super familiar with, this whole world, like what would you say are, or just briefly, what are tax incentives and what are the most common tax incentive in the real estate world? We're going to try to stay in that sphere because, of course, with tax, we can go all over the place.
Yep.
Thousands of codes, but like to just so someone who maybe has not heard about it, hears this for the first time, what are real estate tax incentives and what are the most common ones that people should really pay attention to if they own, an Airbnb or a commercial building or they're a business owner and they own their building? What would you say they should pay attention to for, first and foremost?
Yeah, I mean, with real estate, depreciation is really the number one biggest opportunity. It's the reason that investing in real estate has so many tax opportunities that are associated with it. The reason being, real estate is a tangible asset or it's real property. And the IRS allows us to depreciate, or what that means is to write down the cost of those assets over a certain period of time.
Mm-hmm.
That deterioration ultimately, let's use an example of a short-term rental because we're seeing so much of that in the real estate sector. If we have a short-term rental property that someone's buying, if you do nothing to that property, the IRS agrees that its useful life is about 27 and a half years. That is, if you don't replace the roof, if you don't upgrade anything, over 27 and a half years, the value of the structure itself is going to be worth less than what it was when you bought it. Now, it's interesting because when we buy real estate for the sake of appreciation. We believe and we have seen through the course of our lifetimes that real estate appreciates in value. But typically, that appreciation does also tie with ongoing improvements and keeping the property functional, operational, and repairing things as they need to be repaired. So that depreciation or that write-off of the asset as it deteriorates over time is what is allowing investors to buy an asset. The big key to this is most investors are able to use financing to do that. So if they're putting 20% down, they're getting an 80% loan on the value of that home. The IRS gives you a deduction of the entire home over the course of time for the total amount, even though you're getting a loan or using leverage for a significant portion of it. And so that's what happens is investors can put 20% down, but maybe getting a deduction that is larger than the down payment they put on that home because of how the tax code is written. And so one of the strategies or incentives, which also then expounds on that, is cost segregation. And cost segregation is becoming more and more applicable. We see far more knowledge and education. And we work hard, certainly with our company, to educate investors and real estate owners on the benefits of cost segregation. But it's a fancy term for just we're itemizing all of the assets within a property and then helping those be written off over an accelerated period of time. So we're able to take those quickly, take those deductions and write-offs. And again, essentially, we're getting a larger write-off oftentimes than the initial capital or down payment that they put in upfront for actually acquiring that property.
Excellent. Yeah. So, of course, hopefully people are not super familiar with the whole world of real estate and tax incentives, see the benefit and, the reason why people would go into it. And also, I'm hoping some light bulbs come on. I'm like, hey, I need to look into this because that relates to me. So maybe give me a couple of examples, maybe, that are fresh in your mind of people who have really benefited, in recently, some of the deals maybe that you've closed and they just got a really great, deduction or, like
One
industry
story.
type of industry and then the incentive that will be helpful.
Yeah, I mean, one story I'll share. I have a gentleman that I remember, for some reason, he's one of those conversations I vividly remember having almost 10 years ago. And he was an investor who was just getting into real estate, beginning to buy some rental properties. He's in Southern California and had a pretty good income. and was saying, look, I don't want to just, sit here and do my minimum 401k contribution. I want to actually grow and begin to shift this into real estate. And I feel like this is something I would enjoy more. So he started to buy rental properties, and we had many conversations about what properties and how are we going to depreciate this and how do all the write-offs function with how this all rolls. And so he bought a couple of properties in this first year. That was 10 years ago. And today, this particular client of ours, again, I love these stories because I think it's proof that the American dream is still very achievable. Because this guy, young guy, he was in his late 20s, started buying rental properties. Today, 10 years later, he personally owns over 800 units, and he manages or co-owns through syndicated partnerships. He is a general partner, but he has investors come in syndicated funds that he structures, and he now is managing over 3,500 units in his syndicated structures. And I think it's so incredible to watch that growth. And he was able to use cost segregation to really help speed that process up. Because again, if we use the example of a $500,000 home, buying that, we'll call it a $600,000 home. We have to attribute something to land. So the value of the asset itself is $500,000. Cost segregation for a property like that is probably going to create anywhere from, $100,000 to $150,000 in deductions in the first year, particularly if we get 100% bonus depreciation back. So you can Google that if you don't know what it is. Chat GPT it.
Yeah, it works.
But yeah. But a $500,000 home, and he's claiming $150,000 in deductions or depreciation in the first year. His down payment on that property was probably about $120,000 to buy it. So depending on his tax bracket, how much taxes he's paying, this could be saving him $70,000, $80,000, $90,000, $100,000 in taxes. So again, if he's putting down $120,000 as a down payment, he's leveraging the rest, then he's going to utilize cost segregation. He's going to create a windfall of tax savings, which could be, $100,000 or so, high level example here. But let's say he's saving $100,000 in taxes. Typically, most investors, what they realize is, well, shoot, what do I do now? And the response is, well, okay, now I need to buy another property. Or make improvements, or add an ADU, or do an expansion. We see all of those things.
Right.
But all of those situations are taking that $100,000 he did not pay in taxes, allowing him to then put that down as a down payment on the next home, do cost segregation again. That $100,000 he put down, it's now depreciation again. He's going to depreciate it again on the new property. And so it creates a cycle. And, I was at a conference last year, and I love it. I have this guy that I've actually been working with for years. And he goes, Heidi, I just have to keep buying properties now. It's like every year I have to buy another property because I need the depreciation. And I was like, well, there are worse problems to have.
Yeah, it becomes a drug, huh?
Yeah.
Yes.
Yeah. But it really does allow, and I've seen personally firsthand, our investors be able to grow their portfolios and to be able to change their family. A lot of times people retire and end up becoming full-time real estate investors, and it changes the whole game. But it's very doable. It takes a little leap of faith. But it's really, I love that so much because I've seen it happen, and it's a pretty beautiful thing.
Awesome. Thank you. That's a great story. That's awesome. So now let's talk about a little bit how at Engineer Tax Services we support, the CPAs and the advisors. What does Engineer Tax Services has to offer to CPAs and advisors who do not do sophisticated, tax strategies or real estate incentives, but yet their clients fall into, that field and they could use the help, basically.
Yep. The reason that we Well, I should back up. We have focused from day one on being a specialty tax. And what that means, think of it as the medical space. We're a specialist in the medical world. The CPA is a primary care physician, and then the specialist really is doing orthopedic surgeries. That's really what we're doing when it relates to people's businesses, their taxes, their investments. We have structured this company from day one to not compete with CPAs directly. We get asked all the time if we'll do tax returns. We don't, and we don't want to, because we have the ability to come in side by side, hand in hand, along with our CPA partners to work with their tax clients and create the strategy, bring in the expertise, the subject matter expertise for real estate or research and development or anything that really is specific to that business owner, and help them implement that. We do the study, we even do the complex tax forms, but then the CPA is able to just take that stuff and file the tax return. And it's been a really beautiful relationship with how we've been able to support the CPA industry at a time when there's honestly just not enough time to go around. There's not enough people to do the work. And so this is one thing that using a professional, trustworthy, reputable, we've been around for 25 years.
Yes.
We really strive to be that white glove provider to where we can come in hand and work as a high level advisor to help support them and their clients. And honestly, we make the CPA shine. So they don't have to be the experts, but they just have to know when to call in the right people in the right situations. And we love that. We love how we are able to support CPAs in that space.
That's wonderful. Thank you. Thank you for sharing that. And yeah, I mean, we know that CPAs are always overworked. There are not enough of them. And so any help is, I know they welcome the help when it's not the area of expertise. Now, Engineer Tax Services also has like these little hidden treasures and little gold nuggets to help CPAs and to help, advisors. And can you talk about some of the things that I just had a conversation with a family member who owns, a vet clinic, and I, told him a little bit about, well, have you just dug into all of the things that, your area provides? And usually, even the CPAs don't always know. So what are some of the things that Engineering Tax Services help with on the CPA level, just for them to become better and improve what they already have or add on to? And also business owners, what are some tools kind of on the periphery of the main things that we do?
Yeah. Yeah, there's a lot to unpack there. And we have a lot. What we've done over the years is when we've seen an opportunity, we see a need, we're like, how can we help solve this need? We see a need in the conversations we're having. And so what would be the solution or a solution we can help our partners that is really going to solve some of that? So there are two areas. One, there's the area on the CPA firm side itself. We actually did an acquisition about 6 years ago of a firm called the Growth Partnership. And they really, for 25 years, have focused on nothing but supporting CPA firms in their actual practice. So practice management, marketing, firm growth, partner retreats, how to structure, how to train their staff to be better leaders, not about compliance, not about better tax professionals, but how to make them be better communicators and better leaders, because that's something that is so difficult for many accountants who are trained very technically. So we acquired that firm to help, again, expound and support our CPA partners and bring additional services online where we were seeing some of those pain points and saw an opportunity to help support them in that. And then segueing into another acquisition we did, which I'm really excited about, is a technology platform that we have acquired, which really helps identify any and all incentives, like you're saying, hidden treasures that could be available for a business owner or for a tax client. So whether they're developing something, building a new company, starting something, building technology, what might be available to them from a funding perspective. And it is just unbelievable. But this database has almost 2,000 incentives that it can quickly identify with basic information about where's the business located, what city, what state, what type of business is it, what type of clients are they serving. And we can look at those pieces of information and be able to quickly identify opportunities to help drive incentives and drive funding to help support those companies. Ultimately, what we want at ETS, we do believe that the American dream is absolutely achievable. And our clients are business owners. They are the people that took the leap of faith to start their own company or to become a partner in a business that they have ownership in. And its success is their livelihood. And not just theirs, but for their family and their future and their children. And so we really want to help provide support in every aspect of helping build them up and helping them see even greater success in those businesses.
Absolutely. Thank you so much. This is great. So I'm really hoping that anyone who tunes in, who's, a business owner or CPA is like, okay, I got to dig into this because it's pretty amazing. So one more question. We're getting to the end of this, but it's the end of the year and, a lot of things, a lot of people kind of rush to us, and luckily December 31st doesn't mean that, all of the tax incentives are gone and we're starting a new year. So what are some of the incentives that you would say at the end of the year, business owners, real estate investors should look into before the next tax, filing?
Yeah.
What can still be done?
Yeah.
Or is it too late?
Yeah, a little bit of both. When it comes to real estate, one of the wonderful things is cost segregation, and many of the real estate incentives are applicable retroactively based on when that property or improvements were performed. And so if things were done already for 2024 or even 2023 and prior, we're still able to go back and capture many of the deductions and the benefits of those investments and roll that onto the next tax return. In terms of capturing write-offs or incentives for 2024, if you haven't already made the investment, it's too late for that, I would say. But it's really important to continue to think as we roll into 2025, it's a new year. You do have an entire year, but it goes fast. And beginning to educate yourself on where to invest, what to invest in, if it is real estate, what area, what sector, what investments are available. It's been amazing, as I look at real estate investments, to really even find good deals. It takes a lot of time and a lot of due diligence to be watching and tracking that stuff. And so I would encourage people, start early, educate yourself, which we live in such an incredible era right now where we have so much data at our fingertips to help educate and help us learn to be better investors and how we can utilize these to reduce tax and to take those dollars that we would otherwise pay to the IRS and then convert those into growth assets. But it really needs to be done early on throughout the year so that by the time the year is done and finished, you're able to then roll that up into the tax return. So like I say, people who have investments already, if they bought an asset, if they did major improvements, we can still capture many of those incentives and look at those. If they haven't, then it's really about planning for 2025 and future years and for how to start to lay the groundwork so that they're prepared for the next tax year.
Awesome. Well, thank you. I hope, and I know this can be very valuable for a lot of people listening. Okay. One last question. Again, what is your, and I know, it's a little bit out there, but what is your personal prediction for 2025 when it comes to the tax world and, what you foresee things happen?
Oh boy.
What are you feeling?
Okay. Crystal ball moment. So we do a lot of work in DC as it relates to staying abreast of what's happening in the tax code and with tax incentives. Because much of what we do, and we as partners are all in real estate as well, we are huge proponents of supporting real estate investors and developments and continuing many of those incentives that are currently built into the tax code. However, 2025 is the last year where there are many tax cuts that will expire. I mean, a slew of them. And throughout the year will then convert into significantly higher tax rates for pretty much every investor, pretty much every taxpayer. The new administration, we're already kind of keeping up to speed with the conversations that are happening behind the scenes. We have actually seen a draft of the tax bill that they're working on. Their goal is to have a tax bill passed within the first 100 days of their administration. So that would put us at the end of January, February, March, April. So sometime end of April, mid-May, there's a very real possibility that we will have a new tax bill. That right now is being proposed with an extension for 100% bonus depreciation. It also includes a repeal of the R&D Amortization Act, or 174 amortization. Complex topic, but it does impact companies that are doing research and development in the US. And then a number of other tax cuts that will essentially be extended that were originally part of the Tax Cuts and Jobs Act that was passed in 2017. 2025 is going to be a big year as far as tax bills and the discussion and the debate that occurs. And I think everyone's on pins and needles waiting to see what's going to happen. So I think we're going to see some big changes.
Awesome. Well, thank you so much, Heidi. It's been a pleasure having you. I love working with you, digging into your brain and seeing all the beautiful things that we do at Engineering Tax Services. I wish you a very fun new year.
Thank you.
And wish you all the very best for 2025. And I'm sure I'll have you over again. So thank you so much, Heidi.
Thank you, Julianna. It's always so fun chatting, and I love working with you and appreciate being a guest on the podcast.
Thank you. Thank you for listening to this episode of the Brave New Wealth podcast with Heidi Henderson. I hope you learned a lot. Make sure you leave your questions in the comment sections. Visit the website so you can learn more and take advantage of all of these tax incentives if you are in that situation. I'm your host, Julienna Viegas, and I hope I will see you next time.